Welcome back. Now, the recent interest rate cut certainly did stimulate quite a bit when it comes to the potential for home buyers as well. In South Africa, the search term buy a home has increased since the rate cut announcement. In 2019, one would have needed to earn at least in a household income of over 28,000 Rand to afford a 1 million Rand home. That has now reduced to about 24,000. That's a near 20% reduction then when it comes to that gross income needed for a 1 million Rand home. Let's chat more about this now, and we're joined by Shaun Rademeyer, who is the CEO of MultINet Home Loans. Shaun, this certainly tells you then that it is a buyer's market, but are buyers coming to the market?
Absolutely, Arabella. It's actually quite surprising. We expected a much further dip in the market in May, but in actual fact, we've seen the market turn around quite fast from the lockdown in April. So we've seen anywhere between a 15 and a 10% drop versus 2019, where the expectation was close to 60%.
Are you finding, though, that some might be looking towards capping where the interest rate goes to? I mean, a lot of the time, the capping of interest rates for clients perhaps is about 200 basis points more, but that would still be cheaper than where they currently are right now.
Yeah, we don't see a lot of customers capping their interest rates because it's also not for the full term of your home loan. You know, a capped interest rate will normally be for 5 years, and then the banks will be able to recalculate that interest. What we are seeing in the market is one of the lowest interest rates in the last 35 years in the South African market. And that has created a much wider net of people that can now afford a home loan. You can imagine that only 1% of customers that get a bond are for people that earn 15,000 Rand or less. And now with the interest rate drop, to afford a 500,000 Rand home, you only need to earn almost 13,500 Rand as a household. So it has created a much wider, broader buyer's market. And with the market not growing in terms of the prices on the properties, it is probably the best time for any property buyer and first-time buyer to enter the housing market.
Yeah, look, it certainly is. But we certainly have been here before in the sense of property demand. Maybe not so much here in South Africa, but it was a factor, and a big factor, of the 2008-2009 financial crisis, and even back in the 2000s as well, back in 2001 or so. So should we perhaps be worried that a bubble could form at a later stage? Now, I know you're not necessarily a markets guy, but certainly the jump in demand, do you think it could get too much for the market, if you want to call it that?
No, I think we are much more mature in terms of the market where we were in 2008. We've got quite a lot of rules and regulations that the SARB has put on our financial banks to ensure that those type of scenarios don't happen again. Our prices are also not going out of the roof, so we're not creating a bubble. And the banks are very cautious when they give home loans in terms of the loan to value. So we're not seeing the 105, 110% loan to values where customers, when they do get into financial difficulty, that property can't sell. So we are very healthy as an industry, and I don't believe that we will be close to a bubble again in the future.
Yeah. So if you're able to afford more loans, does that mean that home prices are also increasing at a time like this?
No, actually not. The home loans prices are staying quite stable. In actual fact, it's going down slightly if you take inflation into account. So we're not seeing this massive growth because there's demand. The demand is still subdued. However, what we are seeing is a new customer that can now afford a home loan, where in the past they could not afford it. So the market has lost. Yes, in the upper end you will see quite a bit of a decline there, but in the affordable side, between 500 and a million, there is now all of a sudden a much higher customer base than what there was 6 months ago.
That certainly does create kind of a great sort of, I suppose, a market in that sense as well. Are people shopping within their range, shall we call it that?
Absolutely. The banks do control control that, so you can put an offer on a house out of your range and you'll just get declined. So the banks control that part of the market, and people are most certainly shopping in their range. We've seen a slight reduction in the house prices, so around about 3% over the last 6 months. And that does show you that certain customers are becoming more lenient on the offers and the prices that they're getting for their properties.
Shaun Rademeyer, thank you so much for the time from MultINet Home Loans, joining us there as well. Thank you so much for your time this afternoon. It gets interesting when it comes to house prices in South Africa, and that figure could certainly jump around. For now, seems like we're in a buyer's market. Just be careful, South Africa. With that, though, let's take a look at how other markets